From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for February 10, 2017. In just a moment, we'll be taking a look at the EURUSD, the euro, versus the US dollar for today's trade analysis. But first, a recap of a couple of the trade suggestions made over the past few days. Starting here on the AUD-USD, Australian US dollar, yesterday's analysis was to go short or sell the Australian dollar into resistance, which happens to be the orange shaded area at the very top of the chart. We see this convergence of two different trend lines, the rising blue trend line, the falling red trend line. So for the time being, as long as it's underneath that red trend line, the orange shaded area, I still think that's resistance, and we have the possibility of going short underneath there. That is 76.40 up to 76.55 is that orange shaded area. Yesterday's short was closer to 76.55, but as deep inside that orange zone as I think you can get will at least provide lower risk and higher potential reward to head back down to the purple zone or lower. Now, if the trend turns back up and the US dollar starts to fall off again, we could see this take a turn back higher again. But for the time being, we saw a pretty good surge for the US dollar yesterday. As long as it stays under the orange zone, I think it's a good opportunity to go short. NZD-USD, of course, we've been holding this pair for the past several days as a short as well. The convergence of the blue and the red trend line at the top of the chart. I still think it's a good opportunity to go short, but the timing right now is not great. 71.80, 71.60, the yellow shaded area is holding as your current support. Don't go short now on top of support. It either needs to rise back up to the green zone, which of course will be our resistance, 72.20, 72.45, or break down under the yellow zone if we're going to see continuation back to the 100 period moving average and the blue shaded area down here into the 71.30 level. Also, over here on the dollar franc, we have been in a buy from, again, the convergence of the two trend lines, the black trend line, the red trend line, buying from that 99.60, 99.40 level, the blue shaded area, has been a profitable scenario. Of course, we've pushed through the parity level now. The pink zone becomes our support. Parity becomes our support. If it gets back underneath there, we'll look for it to go lower. But right now, we're targeting this yellow shaded area up here into the 1.0050 to 75 level as our next target for the dollar franc. That being said, if this continues to go up, we typically would expect the euro dollar to go down, and that's exactly what we're seeing. We saw, again, the convergence of the two trend lines, the black and the red trend line. The market broke under the black trend line, held underneath the blue shaded area, and continued to fall. If you sold at the blue zone, you're into profit. Let's go ahead and zoom it in one time here. If you sold into the blue zone, you're in profit still. If you sold like I did and got knocked out with break even, you may not be in it again. So when do we get into it? Well, this is very interesting, the fact that we're underneath the green shaded area, which was support here and support back here. So as long as it's underneath support, that now will become our resistance. 1.06550670 is that green shaded area. So staying underneath there, under the red trend line, under the green zone, will be our main focus for the day today. Take it down to the 4-hour time frame. And as we get down here, yesterday in the live trade room, we spoke about what a false breakout is and what a real breakout is. So you look at the two blue circles, those were false breakouts. In essence, there was no open and close, no singular candle body under the green zone both of those times, and it turned back higher. Then over here, we see that open and close. So now we've increased our confidence that it's going to continue to pressure lower. Now, selling at the bottom, selling at the lowest low, in my opinion, is never a good idea. You want to sell at a higher high. Sell resistance. Sell at a high point, not selling at the lowest price possible. That just doesn't make logical sense. So in this case, what we'll be looking for today is for the market to make another bump its head, maybe back into the 106.50, 55 level, the bottom of that green shaded area. Will give us higher confidence, lower risk to go ahead and go short again in the direction of the current momentum, the red trend line. Now, I know we are trading against the direction of the Forex Black Book, but I think this week's price action, really the price action within the downtrend, the red trend line, gives us some confidence to go ahead and trade short against the trend unless we start to see evidence of reversal back higher again for the euro dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.